basics of binary options. Now, of course, you're going to see this slide 6 times today. These sessions, in fact, the entire day, is sponsored by our compliance department. And I do need to share that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And then this is really important. We are not soliciting or making trade recommendations. Please do not construe anything I say or, in fact, anyone today says as a buy or sell recommendation. We are doing this for your education purposes, and that will become much more relevant and important when we do off-roading sessions. When I say off-roading, I will be sharing the platform a little bit at the end of this session, as well as the end of the knockouts and call spreads. My colleague Dan Cook, I am certain, will be using the platform. We don't want you to take anything we're saying today as a buy or sell recommendation. Today is for your education. Okay, so I need to get that out of the way, and you will again hear that throughout the day. Now, because this is the first session, the agenda for what I'm going to do right now is I am going to do a little bit about who is Nadex. You won't hear this later, but I need to disclose. I need to share this up front because it really is important with and I can't emphasize thousands, tens of thousands of new participants into our markets. It's important for people to understand who is Nadex and why, when I say Nadex is a natural place for retail traders to want to go who are looking for short-term price action, it's important to understand Nadex itself as an entity. Then I'm going to get into what is a binary option, how they work. I'm going to discuss how the price of a binary option moves around and why it could potentially move around, and the variety of choices. Something that distinctly differentiates Nadex from other binary option providers is the variety of choices and the way that you can fine-tune your trade and to trade on your terms, not be dictated by an exchange exactly what you can or cannot trade. And then I am going to do a practical demonstration on the platform. As I mentioned, I'm a big fan of showing people. I find that if I show them, the message really resonates. As I like to say, my mom is from the great state of Missouri, or if I want to pronounce it correctly, Missouri, and it's the show me state. And I am going to show you. I find that when I go through this presentation and then I show you, the message really resonates. All right, to keep us moving along, who is Nadex? And Nadex is an acronym, and it's short for North American Derivatives Exchange. Now, we are a properly regulated exchange in the United States. We are regulated by the CFTC, the Commodity Future Trade Commission. Now, if you're not familiar with the regulatory entities, there are 2 large regulatory entities in the United States. One is the SEC, the Securities Exchange Commission. They regulate equities and the equity markets. The futures markets are the Commodity Future Trading Commission. It is the same regulator that the other large futures exchange in the United States have to report into, namely the Chicago Mercantile Exchange, the CME, a very large publicly traded company, or ICE, the Intercontinental Exchange. They bought and own the New York Stock Exchange. ICE also reports into the CFTC. Now, the reason I mentioned that we are a regulated entity, or there are actually only 2 regulated binary options exchanges in the United States. The other one is a very small exchange, not very much trades there. It has weather contracts. So we are really, Nadex is the premier binary option exchange in the United States. And we are regulated, and that is a differentiation from other potential binary option providers that you might find on the internet. So for instance, if you put a VPN on your computer and you were to go out into the internet and you could find an offshore exchange outside the United States that might provide binary options. But it's really important to understand that those ones are not regulated in the United States. And the differentiation is, as a regulated exchange, we have to adhere to all of the laws, rules, regulations that go along with being properly regulated in the United States, and we are audited by a regulator, and we are monitored, and we absolutely have to adhere to all of those laws and rules. When you go to an offshore provider that is not regulated, I would say caveat emptor, buyer beware. If you were to have some type of challenge issue and require some type of recourse, I would wish you good luck, because there's no place for you to go or any way for you to enforce or try to get any type of recourse, because they simply aren't regulated. They're not even supposed to be accessible from the United States, but you can sneak into them. Nadex is a regulated exchange, and we absolutely have to adhere to all the rules, laws, and regulations of the United States. We have a fair, open, transparent marketplace when it comes to funding or getting your money out of your account. I mean, we are fully on the up and up and regulated by the CFTC. I can't emphasize that enough. Enough of that point. Now, what was Nadex created for? And this is really to the point that why we've got so many thousands of new participants in our markets is Nadex was designed for the individual retail trader. Now, what does that mean? We designed and developed contracts that, one, have a very low cost of entry, and we will discuss that, but namely, they are very small notional value contracts. Other places are trying to come into our space, but we have been around for a decade, more than a decade, with contracts designed for retail traders where you do not need thousands of dollars to access price action in the markets. At Nadex, you can come in with a few $100 and you can absolutely access price action in the markets. The second thing is all of our contracts have very clearly defined risk. There, you might hear when you're in the futures market, you might have heard of terms like initial margin, maintenance margin, margin calls. Forget all that. That goes out the window at Nadex. That simply doesn't exist. Because everything and every contract on Nadex has clearly defined risk, you can never lose more than what you initially put into a trade. You go into a trade knowing exactly what your maximum potential risk is. Now, there is also defined reward that goes along with defined risk, but we designed very, very small notional value contracts for the retail trader in a properly regulated, legal environment in the United States. And people come here, and the number one product we've got is binary options, but we think you're really going to love to hearing about knockouts and call spreads as well. And it's for people who are looking for short-term price action. Are you looking for that action? Are you looking for prices to be moving around? And where is that opportunity? How can I access that when I don't have thousands of dollars? I just want to come in. I've only got a few $100 and I want to get into the markets. That is the Nadex story. Now, let's get into a binary option itself. What is a binary option? And I've mentioned this, it is a short-term contract, and it's got a defined risk reward level. Now, our contracts, it's a prediction, and you're familiar with the concept, you just don't even realize it, but I will share an analogy. But it's a prediction, and that prediction has got three components. Those three components are, one, an underlying market. Now at Nadex, we offer access to equity indices. So whether you want to trade the S&P 500, the NASDAQ, the Dow Jones, you might want to trade a global equity indice like the FTSE in London or the DAX in Germany, or the Nikkei, or that we've got global equity indices. We've got foreign exchange markets. We've got commodity markets. If you're looking for access to oil, gold, nat gas, silver, we've got access to those markets as well. So we've got these underlying markets, and then there's a condition. Now, I call it a condition, but it's the technical terms often sometimes referred to as a strike price or a level. And then there's an expiration time. Now, that condition is phrased in the form of a question. All right, is gold going to be, so the underlying market, gold, is gold, the condition, going to be higher than $1,720 per ounce, and at a certain time in the next 2 hours, at the end of the day, at the end of the week, And we will get into that a little bit, but that's really what it is. It's a condition, it's a question. Will gold be higher than this price at this time? And the interesting thing about Nadex is it's whether you're buying or selling, your risk and reward is clearly defined and capped and is a known quantity before you enter a trade. Now, notice there's a really important word in there, selling. At Nadex, this is something else that differentiates us from other binary option providers, is not only can you buy these contracts, is it going to be higher than, you can also sell it. You could choose to take a contra position. Other places might not even allow you to do that. You might only be allowed to buy. At Nadex, you can buy or sell. And the price of a binary option is it's pretty straightforward. It trades between a range. It can't go any lower than 0, and it can't go any higher than 100. It trades in a range from 0 to 100. Now, the question then is, what does that number represent? Now, I mentioned that these binary options come, it's a market, a condition, and an expiration time. And I gave you the question, will gold be higher than 1720 in the next 2 hours? It's a true or false prediction. Either the event is going to happen or the event does not happen, okay? So, and if it's true, if the event is true, it will settle at 100. And if the event is false, it will go to 0. Now, I mentioned to you, do you probably understand what a binary option is? Because it's a prediction. It's a yes or no question. Is this going to happen? Is this condition going to be happen? Yes or no? And prediction markets are expanding. Forecast markets are expanding. In some places, people want to know, hey, is who's going to win the presidential election? Is this person going to win the presidential election? Yes or no? That's a binary option. You can't invest or trade that. Actually, there might be a school somewhere in the Midwest where I think they allow you to do a little bit, but we've got it in the financial markets. And when I say you're probably familiar with this concept, and I don't want you to think that this is like sports betting, but a sports bet is a binary option as well. I just want to draw the analogy. Will the Bears beat the Packers? Yes or no? Will the Bears cover the spread against the Packers? Yes or no? That's a binary option. We have them in financial markets. Will gold be higher than this price at this time? Yes or no? Will the Dow Jones be higher than this price? Will the Euro US dollar Forex pair be higher than this price? And they're called binary options because they either go to 100 or they go to 0. There's only 2 outcomes, period. Every binary option will either go to 100 because it's true, or it will go to 0 because it's false. And the price that you're actually trading can be thought of as the probability at that moment in time that the event is going to be true as determined by the marketplace. We have an open, transparent marketplace. We have a central limit order book, which we're an exchange, which means all sorts of people can put in their predictions. Anyone can put in their prediction. I think it's going to be true. I want to buy it. Yes. I think it's going to be false. I want to sell it. I'm thinking no. And everyone puts in their predictions, and we've got a marketplace when people have opposite opinions, you have a transaction. One person thinks yes and wants to buy, one person thinks no and they want to sell, and a trade occurs. All right, so anyone can put their order into our central limit order book, also something that differentiates Nadex from other binary option providers, and you're trading the probability that the event is going to be true. So let's just think about that. If gold were trading at 1720 per ounce, and we had a binary option that said, will gold be higher than 1720 at the end of the day? Because it's at the same price, because they're at the same price, there's an equal probability that gold could settle higher than that price or not settle higher than that price. So at that point in time, you would expect the market to be about 50. a 50-50 chance, a 50% chance that it would be true and a 50% chance that it would be false. All right, and hopefully that makes sense. And so the probability that you're looking at different binary options is the probability at that moment in time that the market is pricing the event to be true. So if it's trading at 30, the market is pricing it as only a 30% chance to be true. If it's trading at 80, it's a high probability. The market thinks there's an 80% chance that it's going to be true and go to 100. And similar, and we will mention this, and I will get into this a little deeper, but similar to other listed options that you might be familiar with, volatility and time to settlement, time to expiration, will impact the price of that probability. And you think about it, early in the day, there's a lot of time left. Anything can happen. Very late in the day, when it's very close to settlement, less time for something to move and for the probabilities to change. We will go through examples of that. Now, let's talk about the risk reward, because not only is that price between 0 and 100, can it be thought of as the probability? We did something really clever at Nadex, is we made the notional value of each one of our binary options $100. All right, so the maximum a contract is worth is 100. So the cool thing about that is while it's trading between 0 and 100, which is a probability, it also turns out to be the dollar value of the contract. So it makes it real easy. Now, we calculate your risk reward on the order ticket beforehand, but if it's also the dollar value, let's go back to that example where it's trading 50. If you that gold example, will gold be higher than 1720 and gold is right at 1720? If you bought one at 50, if it's false, it goes to 0. Now you risked 50 because you bought it, you paid 50, and if it's false, it goes to 0. You could lose $50. Now, if it's true, it goes from 50 and it goes to 100. Well, you risked 50, it went to 100, so you made 50. So you're risking 50 to make 50. You're getting even odds. All right, 1 to 1. Risk 50 to make 50. Now, you could have done it the other way. You could have sold it at 50. You could say, no, I think it's not going to go higher. It's not going to settle higher than 1720. I'm going to sell it at 50. Now, if I sell it at 50 and it turns out to be false and it goes to 0, I made $50. I sold it at 50 and it went to 0. If I sell it at 50 and it becomes true and it goes to 100, I can't lose any. That's as high as it can go. I sold at 50, it went to 100, I lost 50. So you know before you get into a trade what you could potentially make and what you could potentially lose. And what it ends up being is that we fully collateralize. The buyer puts in the most they can lose. The seller puts in the most they can lose. This is why you'll never have a margin call. You put into your trade the most that you can lose. That's your collateral. And then whether you're buying or selling, you know how much you could potentially make, because it can only go up to 100, right, if the statement ends up being true, and it can only go down to 0 if the statement turns out to be false. Right? And now the math on that, on the dollars, we do for you on the order ticket, and I will show you that. And the thing is if you wanted to risk more, or you were looking for a higher quantity of notional value, because this is risk 40 to potentially make 60, risk 80 to potentially make 20. If you wanted more, you could just trade more than one contract. Trade 2 contracts, and all of a sudden you've got $200 in notional value. You wanted to get up to $500, you could trade 5 contracts. So you can scale the number of contracts to suit your risk reward appetite, knowing that the smallest notional value, the contract can't be worth any more than 100. That is a contract designed for the retail audience. That is a contract designed for the retail audience with defined risk, defined reward. Now, here's that order ticket that I was talking about. We are looking at an order ticket, and let's just kind of go through what's on that order ticket very quickly. Number one, there will be an indicative price of the current market. So here's an example of, it says US Tech 100, that is the NASDAQ 100. This settles against the NASDAQ future. All right, so we got an indicative price on the NASDAQ, and at the time I took this, it was trading 13,068. 13,068. And then there was a condition. It gives you the condition. Will NASDAQ, the product, finish higher than 13,120? Now, notice NASDAQ is currently trading 13,068, and the question is, will it finish higher than 13,120? It is currently lower than that price. It is currently lower than where it would need to be for it to go to 100, and then it's got an expiration time. It's got a settlement time at 4:15 p.m. Notice that there's an expiration clock in the upper right-hand corner that tells you this particular order. At the time I took a picture of this ticket, it had over 22 hours to go until expiration. And at expiration, it's a binary option. It will either settle at 0 or it will settle at 100. Then you'll see a market. Okay, now there's a bid price, $13.75. There's an offer at $42.75. Now, if I wanted to buy, I could pay $42.75. I think, yes, it's going to be higher. I could buy it at $42.75. If I think no, I could sell it at $39.75. I think it's going to go to 0, but I don't have to trade on those prices. I can try to maybe trade between there. Something else that is distinctly different at Nadex than other binary option providers. Here, I'm actually, I could try to buy it in between the market at $40.25. Now, am I going to necessarily buy it? I don't know. Someone would have to sell it to me, but I am allowed to put a limit price between the bid-ask spread. I could even put a limit price to buy it lower or a limit price to sell it higher. We have a central limit order book. Anyone can put orders wherever they like if they want to buy it lower or sell it higher or in between the bid-ask spread. Now, if I tried to buy one at $40.25, notice on our order ticket, it tells me exactly what my potential maximum risk and my potential maximum profit are before I enter the trade. If I tried to buy one at $40.25 and I bought it, that's the most I could stand to lose. If I bought it at $40.25, I'm risking $40.25 and it could go to 0. That's my risk. If I buy it at $40.25 and it goes up to 100, I'd make $59.75. Okay, and this would work the same if I were selling. We would do all the math for you. And as you can see, because I mentioned this is the probability, notice that 40.25, I think, is actually exactly in the middle of the bid-ask spread. At this moment in time, the market is predicting that there's a 40% chance that it will finish higher than 13,120 at that when I was trading at that moment in time. And those probabilities will change. Now, I mentioned those probabilities will change. So we know that the price of a binary option is the probability of the event occurring, the event being true. Now, when there's a 40% chance of it being true, that means there's a 60% chance of it being false. Does that mean it's not going to happen? No, it means there's a higher probability that it won't happen, but there's still a 40% chance that it will happen. Now, that probability will fluctuate. It will constantly fluctuate. Now, it does not have to move in line with the underlying. That is really important, and I'm going to show you, we're going to walk through quickly a couple of examples, but the underlying can move around. Just because the underlying price goes up does not mean the price of the binary option has to go up, and I'll explain that. But it will move around, and the things that are going to impact the price of that binary option are time to expiration and volatility. Okay, if there's a lot of volatility, we don't know where this is going. If there's a lot of time to expiration, there's a lot of time for something to happen. If there's little time left to expiration, it will affect those probabilities. And if there's low volatility, the market is going to price that in. And let's quickly walk through some examples so you can see that in real life. All right, I have a chart up. Here's a chart of the euro US dollar, and the question is will it be higher than 1.14 at 3 p.m.? All right, and when you can see the chart, it's volatile and it moved around all day, and there is the 1.14 price. Now let's go through and see what happened to the price of this binary option as the market moved throughout the day and as time moved. All right, because I mentioned price of the underlying and volatility and time to expiration will change the price of the binary option. Earlier in the day, it was well above 1.14, and the market was giving it, and I'm going to use the middle price. I'm going to use, because that's the probability the market's giving, that it was saying there was a 56% chance that come the end of the day, it would settle higher than 1.14. Now, very early in the day, it sold off, and it did. The price of the binary option did move with the price of the euro US dollar pair. As the euro as it went down and went below 1.14, the probability of the event being true, the price of the binary option, dropped down to 44%. Okay, and that's because it dropped below the 1.14 line. Now, skip ahead. Half the day goes by. It chops, and it ends up in the pretty much the exact same place. Time has moved forward, but what happened is the probability of it being true dropped to 36%. What changed? Why is it not 44%? Well, it dropped down to 36% because now there's only half a day left. There's less time for it to be true. There's less time for it to settle above 1.14. So the market priced the probability of this being true a little lower. Now, it makes a rally much similar to what it did early in the day, but now there's only a third of the day left. It is well above 1.14, and now there's a 74% chance. So you can see the price of these binary options do move. They move around as the price of the underlying moves and as time moves. Then there was a dramatic sell-off, and this binary option got crushed. Now there was, with a little bit left in the day, there was only a 24% chance, only 1 in 4 that it would settle above, but it rallied up above and it ultimately settled at 100. Okay, you can see how there was plenty of opportunity of short-term price action as this moved throughout the day. Now, what I would like to do quickly, because this is a volatile environment and you're seeing a little bit how time decay works between some of these, but I want to show you what happens in a low volatility environment. I'm going to walk through one example here where it's the same thing. The price is, though, it stays below 1.14 for the entire day. Now, early in the day, we're at that 44% probability. And as the day goes on, notice here, now we're at 34%. All right, we've skipped a half the day. It's a little bit lower. It's a low volatility environment. This thing's not moving around, and the market's only giving a 34% chance that it gets higher. Now, look what happens. It actually trades up. Okay, the price of the euro US dollar pair goes higher. All right, it goes from where it was, it goes higher, but the price of the binary option actually went down. So the binary option does not have to move in line with the underlying. And why did it move down? Well, one, volatility is extremely low, and two, there's very little time left in the day for something to happen. Now, at this point, there's a 20% chance that it could pop and settle above 1.14, and it could. I mean, that does happen. That absolutely does happen. And in fact, you would expect it at 20%, 1 in 5 times for it to do that. But here in this case, it ultimately went to 0. So you can see how with low volatility, how it crushed the price of the binary option. And even when the price of the binary option went up, the price of the underlying went up, the price of the binary option actually went down. Low volatility, little time left. I'm not going to go through this example. It's the exact same thing where it stays above. Again, you can look at that on the slide deck later if you request that. But for the sake of time, I'd like to keep moving along because there's a couple more things I want to cover, and I definitely want to still do the show me. And I definitely want to give us a chance to take a break before Dan Cook comes on and talks about a binary option trading strategy. So as you can see, though, the price of the binary option is definitely impacted by the price movement of the underlying, time, and volatility. Okay, now something that differentiates Nadex from other binary option providers are the variety of choices that we give you. For each market and for each time frame, there are a variety of conditions. So you can choose the market that suits you. You can choose the time frame that suits you. And when I say time frame, that is duration. That is what Brian Caprice will be talking about later, is choosing the duration. Duration is how much time is left in this contract. And he will be doing an entire presentation on fine-tuning what duration, what time frame that you might want to choose. And if things are really volatile, we might add additional conditions on the fly if it warrants it. Now, when I say we've got a variety of choices, well, we've got a variety of products. I mentioned we've got equity indices, we've got commodities, energies and metals, we've got foreign exchange products. Here is the euro US dollar, and you can see that it's got a variety of durations, a variety of times where contracts settle. We've got, in foreign exchange, we've got 5-minute binaries, 2-hour binaries, and you can see there's 2 hours throughout. There's multiple choices throughout the day, every 4 hours, and then we got weekly contracts. And you can see time to expiration is listed there. The top one's only got 9.5 minutes to go. The one right below that's got 1 hour and 9 minutes. The one at the bottom, the weekly contract, has 2 days and 23 hours to go. So you can choose the duration that suits your trade. You've got to decide which time frame that you'd like. And in each time frame, we're going to give you a variety of conditions. So here's just the weekly. I just took a quick little snapshot. Notice that we've got condition strike prices: 1 spot 05, 1 spot 06, 1 spot 07, 1 spot 08. So you can fine tune your trade to the condition, the duration, and the market. Or in reverse order, you choose which market you want to trade: gold, oil, silver, a foreign exchange market, an equity index, the Dow, the Nasdaq, the S&P 500. You choose the time frame. For equity indices, we got 20-minute contracts. So you could decide, hey, where am I looking for the action? And then what level do I want? So other binary option providers give you one single choice. Yes, that makes it easy. Is this going up? Yes or no? We're going to allow you the opportunity to fine tune your trade and trade on the terms that suit you, on the terms that fit your opinion. And you can choose what you want to trade. We give you all those options. All right, now, one thing I have not spoken about, and this is going to be something that I can't emphasize enough. If you take nothing else away from this presentation, alert, 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 take this one thing away. Is an important rule when trading binary options, and this is true for trading knockouts and call spreads as well. Just because there's an expiration associated with the contract does not mean you need to wait until then to see what happens. Let me say that again. Just because there's an expiration associated with the contract does not mean you have to wait and see what happens. You can choose to exit your position early if you want, prior to expiration, prior to settlement. Why would you do that? You would do it to either lock in profits or limit losses. And if you're looking for short-term price action, if you look back at that previous example where that euro US dollar was swinging around all day, you could have traded that multiple times throughout the day and potentially taken small profits throughout the day. If you wanted to, you do not have to wait and see what happens. One thing traders don't like are surprises. And as you get very, very close to settlement or expiration time, something can move very, very quickly and turn a profit into a loss. Now, it could turn a loss into an accidental profit, but we don't like surprises. You can choose to get out early and move on to the next trade. Right? That is really important. And the way you would do that is if you were long one contract, you would simply sell it out. If you were short one contract, you would simply buy it back. And you're closed out of your position and you move on. So just because there's an expiration does not mean you need to wait until then. Remember this slide deck. If you'd like to get a copy of any of the slide decks from today, I'll be mentioning this, you'll need to email customerservice@nadex.com. I'd also recommend you follow us on social media, particularly our particularly our YouTube channel. Every morning, 8:45 a.m. Eastern, 7:45 a.m. Central, we do a 15-minute morning analysis where we walk through hot spots in the market. What happened overnight? What's going to be happening during the day? Where might you want to look for something where the markets might be volatile? And we try to give you an idea of where you could potentially be looking. All right. The other thing I want to mention real quickly before we jump over to the platform, if you haven't done this yet or you haven't taken advantage of this yet, you really ought to. In our platform, this is right off of our platform, but you can refer your friends, all right? You refer a friend, you invite them, all right? You get a unique link. You can invite them. If they sign up and place 5 trades within 30 days, you're each gonna get $100. And you could do that with up to 10 friends. Play along with others, have some fun. Get your friends in on the action. You can actually, if you get 10 friends in, they all do this, that's $1,000 your way. Okay, I want to do an off-road session. I want to go through an example. We're going to do this. I think we've still got a little bit of time here, and then we'll still have an opportunity to take a break before my colleague Dan Cook comes in to talk about a trading strategy for binary options. But I do want to show you. I promised you I would show you, so I'm going to. Okay. This is the Nadex platform. I am not going to do an entire walkthrough. We've got sessions. If you go to our webinar section, I know we've got one coming up in a couple of weeks. Adam McCaden's going to be running it. But let's just take a look at binary options. All right. And as you can see, we've got 5-minute binary options. All right. We've got 20-minute binary options. These are the indices. We've got binary options, and look at all these indices. The FTSE, the DAX, the Nikkei, the S&P 500, the Russell. All right, and in each one of these, there are a variety. Oh, let's refresh this. There we go, because some of these had already settled. And you can see how much time is left in each one of these. And you can choose the duration that suits you. All right, there's the indices. Here's all the foreign exchange, all the top foreign exchange pairs. All right, the most highly traded forex pairs, they're all in here as choices. Commodities, as I mentioned, crude oil, gold, natural gas, silver. Look at that gold. All right, so now, you know what? I am just going to take a quick look. Let's just take a look at gold daily. I just want to give you an idea of what our charts look like, and then I'm going to go through a 5-minute binary option example. It's a bit on steroids. I just want you to be aware on our charts, we do have indicators that you can populate your charts with. We have drawing tools, Fibonacci. You can put in your own channels. You can customize your charts however you like. We make it pretty easy for you. They're pretty robust tools. It's all the standard tools that you would probably want, but they're there. Okay, now let's take a look at the Euro US dollar, and I am going to go through a 5-minute binary option example. Notice there are 4 minutes and 23 seconds left. I'm going to hide this. I've got a 1-minute chart. This is great. I am going to zoom in, and let's get a little closer, and let's see if we got some volatility in here. All right. All right, with 1 minute to go, with 4 minutes to go, and it's kind of quiet. I just want you to see, and let's just see what happens here. Here is the 1885. Notice how this is ticking lower. They're only giving this a 26% chance that it's going to settle higher. Remember, all of these will either go to 0 or 100. Very, very low probability it's going to get above 1889, and it's still a pretty high probability, up in the 85%, that it's going to stay above 1881. Notice when I click buy or sell, it shades the chart where I need this to be for this to be a profitable trade. Now, as this ticks lower, oh, now it's ticking higher. Look at this. I mean, you've watched this go. It dropped down to around 80. Now it's up near 90. This, which was just low, is now up near. I think it's going to keep going. Can I buy one? Look at that. It keeps going higher. 41.70. All right. I'm just trying to buy one just for an example. I bought one. All right. As an example, what did I pay? I paid 41.25. Okay. Now this is not a buy or sell recommendation. I paid 41.25 and it's ticking higher. Now look at this. Wow. You know what? I can either wait and see if this is going to go to 100, or I can take that as a partial profit. If I want to sell one right now at 68, place my order. I've got an order at 6. Oh, look, it's ticking back down. There's my order. I traded it. I'm out of my position. In what was that? 2 minutes. I bought a couple and I sold them back out. I bought them at 41.25 and I sold them at 68. There we go. 26 bucks times 2 is 50. That was a quick $50. Now, I'm not telling you that's going to happen every single time. Am I glad that I sold it? Yeah. Look what happened. I got out at 68, and as time ticked on, it started coming down. Now this is below 50. Thank you. Now, if I want to try to do this again, maybe I think it's going to stay below. Maybe I think it's going to stay below, and I want to sell them at 34. All right, I just placed an order. I think it's going to stay below. I'm back in. I got a new trade. I sold 2 at 42.25. Now, I've got a minute and a half here. I need it to stay below. So not only did I buy this one and liquidate it for a small profit, I sold this one and I could buy it back or I can let it go. I don't know what's going to happen here. Look at this. It's going my way. It's ticking down. Whoa, it's coming all the way back. I mean, you can see how quickly these move. I should have probably bought it back. Maybe, look at this. All right, now I'm getting a little uncomfortable. It's taken off. Maybe I want to buy it back for a partial loss. Okay, I can buy it back and I could take a partial loss. There we go. I sold it. I bought it back. Let's just take a look. I sold it at 42. I bought it back at 50. I gave back 16 on the initial trade. Did I need to do that? I don't know. This is what I mean by the volatility. As this thing gets close to 36 seconds. Now watch what's going to happen here. With 30 seconds to go, you're going to watch all of these prices go blank. Now, why did the prices go blank on me? That is because in these last 25 seconds, people aren't comfortable. They don't know what this thing's going to do. As it moves, these all go to 0 or 100. Now, I bought it here and sold it for a profit. I sold it here and bought it back for a loss. And look at this, 8 seconds to go. This is the one that I traded, that I sold and bought back for a partial loss. 3, 2, 1, and it went to 100. I'm glad I bought it back. I got lucky. Had I bought it back earlier, I could have actually made a little profit, but it went against me. I got uncomfortable. Now, notice when there's a new 5-minute period, I can refresh, and I've got a new set of probabilities and a new counter. Now, I wanted you to see that because this is how binary options will move, except this is hyperinflated. This is in 5 minutes with very close strikes. You won't see that extreme volatility when there's more time, or because there's going to be, and the strikes are a little further apart. But this is why people exit positions early, is because they don't want those surprises. As you get very, very close to settlement, anything can really happen. It can move and turn, and everything's got to go to 0 or 100. It could turn a winner into a loser. It could turn a loser into a winner too. But you see how quickly the probabilities on these can move, particularly as you get close to expiration. Okay. With that, I am going to wrap up the very first session. I want to be able to take a break. We've got 9 minutes before the top of the hour. My colleague Dan Cook is going to go through a day trading strategy. Let me switch what I'm showing. Here we go. Oh, I wanted to apologize. Let's just show the slideshow on that. It'll be a little bit cleaner. Hey. Okay. So next up is a day trading strategy for binary options. Dan Cook, my colleague from Nadex. As a reminder, yes, this is being recorded. You will find the recordings on the Nadex website, nadex.com, learning, webinars, and look in the archive. If you'd like any of these slide decks, remember, you'll need to email customer service at nadex.com. With that, I am going to put this here. We are going to go on pause, go take a break. The rest of us are going to go on mute. I might do a sound check with Dan to make sure that he's connected and everything looks good. But we will start back up with a strategy for day trading binary options. Dan Cook with Nadex. We'll be back in 8 minutes, folks.